welcome to another Major Market Movements End of the Week Market Review for October 30th, 2015. I'm Quad G, and this is going to be the last of my videos for who knows how long, maybe forever. As I said in the previous Precious Metals Complex video, just before this one, I am closing up shop at Major Market Movements and moving on to do some other things. And so I wanted to take this time to go over the macro view of a lot of different major markets and give you something to chew on for the next few years going forward. Hopefully they can be a service to you while I am away. And I don't know, we'll see what happens. But so in this video, we're going to cover a bunch of different markets, the US dollar, crude oil, corn, the Dow, some coffee, and a few other markets. So this may take a while, but I hope you can settle in for what could be some interesting analysis for you. So here we are looking at the US dollar and the long-term view starting all the way back here in 2001 into 2015. And what I'm seeing here is we've got this impulse to the downside, 1, 2, sharp, 3, A, B, C, flat for 4, and then a final fifth into a wave 1, or this could be a wave, possibly a wave 2, or not a 2, wave A, possibly. But from this point, this low at 70.69, we've been in a steady correction to the upside, correcting this impulsive drive from 2001. And what I see here is we've got initial wave A up, followed by a three-legged wave B down, and now we're working on a five-wave move to the upside that doesn't look completed yet. We've got a wave 1, 2, looks like a flat. We've got a wave 3 to the upside. It looks like an ABC down for a sharp 4 that could be finished. And now working on what could be wave 5 of C of 2 to the upside, which I don't think we'll have any trouble coming up to test the 61.8% Fibo right there at 101.79. But there's also a chance it could come up and fill in this manic gap to the downside that occurred back here in 2002. The gap opening, the top there is at 106.41. So that's another potential target for this move. But once it's finished, I do think this is a completion of a wave 2 or a wave B, and it could turn right back around and we could see a impulsive drive to the downside thereafter. I want to zoom in a little closer to this wave 3-4 move. We've got ABC down, and then another ABC up for an X, and then another ABC down for what looks like a double zigzag completion for a sharp 4. And since then we've got an impulse up, ABC, sideways flat correction for 2, and now we're into sub 1, looking for a small sub 2 in the next week or two correction, and then from there complete the rule of 4 breakout to the upside into 3 of 3 of 5. Currently this blue trend line has been tested, let's see, once, twice, 3 times. Now on the 4th try, we may straddle through it, fiddle through it a few times before to finish up wave 2 here, and then resume up. The path should resume up here into 3 of 5. Key support is down here at wave 2, and that low is at 93.80. So everything's looking very bullish while above that level. I want to take a look at USD CHF. Long-term view, also you can see the orange trend line here that originated all the way back here in 2006. It's been pressured once, twice, 3 times, 4 times, possibly a 5th time here. It looks like it could be close to breaking out. And a breakout here could allow for a move up into the 38.2% Fibo, right there at 1.1327. The other potential target with an upside move is the 61.8% Fibo at 1.3960. Right now, we're kind of in range bound consolidation right here between this swing high and this swing low. But I think once this high is broken and that orange trend line is broken, it's going to let loose a lot of energy to the upside. And if we zoom in here further, I would say we're currently in an uptrend. We got higher highs and higher lows to the upside. And this last swing low is key support in the short term. That low is at 94.75. Let's take a look at natural gas long-term chart. So out of the 1991 low here, I see a wave 1, 2, 3, 4, and 5. It's a leading diagonal. Wave 4 can overlap into wave 1 in a leading diagonal as long as 1, 3, and 5 are all impulses. And I think that can be readily seen in that particular move. So we got wave 1 complete with a leading diagonal. And then from that top, we've got wave A complete, B, and now we're working on wave C to the downside for a 335 flat. We've got wave C, we've got wave 1, 2 complete, wave 3. We've got an A, B, C for a flat, wave 4 complete, and expanding flat. And now if we zoom in here a little bit closer, we're working on wave 1, wave 2, wave 3, wave 4, and the final fifth, which there is a slight chance with this hammer candle on the weekly basis here. We may have truncated wave 5, which means it didn't go below the last major swing low, wave B there. And it could be complete, and we could start our rally, major rally to the upside right here now. In order for that to be the case, we would need to see some follow through next week that could come up and give us a rule of 4 breakout above the blue trend line here. Currently, that is above right here at about $2.59. Once we get a solid breakout above that, and this last short-term swing high, roughly at about $2.72, that should be a really good indication that wave 5 of 5 is in fact complete, and we are starting our major market movement to the upside for in natural gas. However, if this stalls right here and we're not able to clear that blue trend line, we still have the possibility of another lower low but should end up being a minor incremental low below, let's say, $1.90. I think I'll just go down there by a few cents. That would be a good prime time to be looking for another bottom in that market and get a nice ride to the upside, which could last for several years. And if it is a wave 3, like I propose here, let me back out again. We got wave 2, wave 1, wave 2, and wave 3 to the upside. So wave 3 could easily eclipse wave 1 here that ended at $10. Wave 3 could easily go to $30+ without any trouble. It could go potentially several times off the bottom here at $1.90. You could be looking at I would not be surprised if this market didn't go up. Let me kick off the auto here to give you a better idea of where I think this could go. I would say that wave 1 could be eclipsed, and I think $80 to $100 is certainly possible with this wave 3 to the upside. Excuse me, 100 points, not really dollars, but anyway. So that's the tremendous potential that I see waiting in that market. Obviously, let me back up here. Wave 2 would be busted, this whole count would be busted if the origination of wave 1 is taken out by further selling. And that low sat back here in 1991. If I can get on in here, get on there, is roughly about $1.06. So you break that level, and this count is busted. But I suspect we may not get even down that far. Okay, U.S. Crude oil count long term. I think 2008 was a wave 3. It could be a subwave 1, but we'll go with a wave 3 for now. We got that initial plunge down in 2008, 2009 into wave A. We've since bounced up in 3 waves, A, B, C, for wave B. And now we've got the completion of 5 waves down, or near completion, with wave 1, wave 2, 3, 4, and 5. Wave 5 may have finished here, but so far this bounce up is looking somewhat lazy. Not what I would expect from a significant, major bottom here. So I have to leave open for the potential of another lower low in the price at this time while the price stays under 62.56. If the price comes up and challenges or exceeds 62.56, then that's probably going to be a really good indication that wave 5 of C of 4 is finished and we are starting a major wave 5 to the upside, which again probably wouldn't have any trouble going up to $220 to $300 a barrel. Here's another interesting chart that I've been paying attention to for a while now. This is a really good indication of potential bottoming spots, major bottoming spots for crude oil. Anytime, this is the gold, long-term gold and crude oil ratio, which means that when the price of gold causes the ratio to move up because of either oil weakness or strength in gold, causes the ratio to move up to 27.50 or up to 33 or so. That's a really good indication that crude oil could be putting in a significant bottom. And you can see that every time we've hit this green zone here, you follow the blue line down, we've seen significant bottoms in crude oil. Like back here when crude was trading in the $6 range and bounced all the way up here into $8.50. Another bounce, another bottom, another bounce, another bottom, and this particular bottom was a major bounce. That was in 1999, and then here's the 2008 sell-off, and you can see here again the value of gold versus the value of a barrel of crude caused the ratio to spike up here into 27.50 and above, and that again set a major bottom for crude oil. Excuse me. This is the ratio. I was thinking it earlier as the price of crude, but that's not correct. Anyway, the crude oil did bottom here at about $33, $34, and then we saw the bounce up, and now we're hitting it again. Here we've got another major sell-off in crude oil, while gold is holding somewhat steady, and we're causing the ratio to spike up here into, let me move this blue line. You see we've spiked in a couple times up into this 27.50 plus zone. Again, this is a good indication that crude oil could be setting a bottom here in the very near term. Let's take a look at corn. Another major Elliott wave count here from this particular wave 1 bottom was set all the way back here in 1968. We've got a first shot up that basically the price there was 102 and came up here to 410. So a multiple advance to the upside for wave 1. And then since then, that top in 1974, we've got wave A down, wave B, extended B up, wave C down into wave 2 flat that completed in the year 2000. And then from there, we've got a wave 1, 2, 3, 4, 5 up for a subwave 1 as a leading diagonal. That came up into 2008. And since 2008, we've been working on the sideways choppy flat correction for wave A, B, and C. And we'll zoom in on this a bit more. This is a monthly chart. Let's go to the weekly. So here's our wave B top. And it looks to me as though we've got wave 1, 2, 3, 4, and now 5 complete of C of 2. We've got an initial wave 1 up, and so far we're chopping sideways for a completion of wave 2, which may or may not be finished yet. I would say this top right here is a potential breakout point to the upside, right there at 454. Get above that, and I would say you're well into wave 3 to the upside, which I doubt would have any trouble coming all the way back up here to the 815 to say 850 level in one quick impulse to get this ball rolling to the upside for a major advance. Again, go back to the monthly. And so you've got wave 1, 2, 1, 2. So you've got 3 of 3, massive advance to the upside, yet ahead if this count is correct. I would say this count is definitely in jeopardy if the price was to come down here and take out the blue trend line here. It's a major generational supporting trend line. Take that out, then more likely this is not a embedded 1-2-1-2 count, but instead it's just an ABC count, corrective count to the upside, and we got a lot more selling to do to the downside upon breaking that trend line. All right, let's take a look at the Dow. When I back out here, this is a monthly chart, but this count goes all the way back here to 1929. Here's our 1929 stock market crash top. That was the initial wave 1 up, and then we had a sharp wave 2 to the downside on that crash that caused the market to dive some 80, I think it was 89% or more. Major crash, sharp, very sharp wave 2. But from that low, we saw initial impulse up for wave sub 1, sub 2, 3, 4, which was a flat correction, alternated nicely with wave 2, which was sharp, and then a 1, 2, 3, 4, 5, 5 of 3. And ever since that 2000 top for wave 3, zoom in here a little bit closer. And I think we'll go to a weekly here. So 2000 was really a significant top. Wave 5 of 5 of 3. And since then, you saw a wave A down, a wave B up, and then from wave B we see there was a 5-wave move down into a wave C of 4 for a 3, 3, 5 expanded flat count. And now we're working on the final fifth to the upside of a major impulsive series that's lasted decades, which means once 5 of 5 is complete, you're looking at decades of correction, if this count is correct, from this point. So the upside, as I see it, the upside in the stock market is very limited. And once it's completed with this major impulsive series stemming all the way back from the Great Depression era, we're in for an even greater depression that may not complete for decades. And we'll zoom in this count a little bit further here. The way I see it is we got wave 1 up, and we got an A, B, C down for a running flat for wave 2. We got wave 3 up here completed, right here into an ending diagonal, And now we're working on a wave 4 sharp if wave 4 is going to alternate with a flat wave 2. So I think we just got initial wave A down that occurred in August. Working on a three-legged move up into wave B, which may end fairly soon. And then once that's completed, we got another quick move to the downside for wave C of 4. That could come down here to test the point of recognition, which also just happens to be, this is the point, this count right here is the point of recognition for this wave 3 advance. And it also happens to be the breakout point above the previous swing high, long-term swing high, which was the wave B here back in 2007. So I think there's a good chance that this market may be wanting to come down here and backtest that breakout and the point of recognition before sailing up again into wave 5 of 5. Now I've taken a external retrace of this wave BC here, and that measure comes up at the external retrace of 1.618%, gives us a target of about 18,974. So wave 5, it is possible that wave 5 could complete somewhere near that point. It would not surprise me one bit. And then we'll start our major sell-off from that point. This would be a major generational high that probably won't be broken again for decades. Your children may not see higher highs in the Dow again if this count is correct. Maybe your great grandchildren, potentially. But anyway, that is if even the Dow exists as an index by the time this major correction is finished. So anyway, the other thing I see potentially is if this current move up that I suspect is wave B blows through key resistance at 18,351 and it comes up here and tags 18,974 much sooner rather than later, then I would have to say this wave 4 did in fact already complete. It was just much smaller than wave 2. And we're looking at wave 5 completing right here and now, much sooner, maybe even as early as January, and then we could start our major sell-off from that point. So a couple different avenues that I see there. All really kind of depends on how the market handles this last swing high at 18,351. All right, carrying on. All right, so here's coffee. I've had some pretty good success with this market, and what I'm seeing here is that we've got an impulsive series to the downside completed for a wave A. We had an impulsive jump up for a wave A or a wave 1. We since then had ABC down for wave A, ABC down for extended B, and now we've got 1, 2, 3, 4, and 5 waves complete to the downside for wave C of B of 2 or 2. And now let's go into the daily. What I see here on the daily is we've got an initial impulse up complete up into what could be a right neckline of a bullish inverted head and shoulders pattern. This being the left shoulder here, left neckline. This would be the head pop up into the right neckline and now the right shoulder, which is currently being worked on. Once the shoulder is completed, which has to, if this count is correct, the price has to stay above this head right here, which has a low of 113.50. So the price, this current corrective move to the downside has to stay above 113.50, or a break below that upsets this count, and we've got something else taking shape here. Possibly just another incremental low and have to forcing us to do another recount. But once this corrective move is complete and we shoot up here and break the neckline here, that pink line, I think we'll be off and running into a major surge to the upside. into wave C or 3, that should have no problem coming up here well above 224, maybe even to 240 in possibly one very quick impulsive move. So that's going to conclude my very last market review of these major markets, and I just want to again thank my supporters who have been there through thick and thin to support major market movements and support this prognostication business, and it's been a good run, and I'm just very, very appreciative, and I hope you all have a good time trading these markets, and again, I hope this analysis has been a benefit to you and will lead you into profits in the years to come. All right, this is Quad G signing out for the last time. Adios.